people there? Okay, guys, welcome everyone to this week's seminar. The recorders is always going to be available later during the day, just in case. Guys, the past week, in some degrees, was a very, it was kind of quiet week due to the holiday, but at the same time, it was a week that defined, in my humble opinion, some long-term charge. I mean, after doing the weekly all day, we draw the conclusion that one way or the other, the US dollar is gonna get strong. At this stage, we're favoring the diagonal in the US dollar. We mentioned the diagonal long ago, and it looks like it's very possible that the leading diagonal in the dollar is in place. Now, that right there, when we're talking about charge in the daily and the weekly. So technically speaking, the short-term idea that sometimes a bounce should happen in the market is still in place. That not necessarily means that the pair can drop another 80 to 100 picks and then bounce. And in a matter of fact, that's what we do believe. But at this stage, I mean, it's very dangerous to chase to the downside. Better to stay a little bit on the side and wait for a better trading opportunity. Now, that depends on each one style. I mean, we cannot control each one style. We can do the best that we can in order to provide our humble opinion, but not necessarily mean that everyone have the same style. Now, let's start with here. This is the euro on the daily. If you take a look at the euro on the daily, we were operating under the idea that this decline is going to take it was about to take the form of the big way with another move to the upside before a biggest degree decline. We knew when the euro was around 142, we knew at that moment that the euro is going to drop to at least 134, 135 area. Well, it happens. But in my humble opinion, the most important event that happened last week is this one. It means that the trend line, this trend line right here, between these two lows, which is the one that was supporting the idea of a triangle or this type of triangle, in other words, that the market is going to respect 131.40 area and it's going to bounce higher. That trend line, it was broken in the daily and the weekly closing. That's telling me that the most likely scenario, believe it or not, is more downside on the euro. Now, that's only if you take a look at this on the daily and the weekly chart. Now, if you get a little dip between this decline, what we are expecting is, and what we believe is taking place, is that in most pair, the decline that started on May the 4th here is still in place. So that means that the count that we are publishing since last week, that the D-way within the triangle cannot be in place. I mean, that we're going to go for the biggest D-way. In other words, that the D-way is going to reach an area around this area or a little deeper around this area. That's the preferred scenario. Why do we prefer that scenario? Based in cable. Now, also based in the dollar index. Now, how that scenario should play out? That scenario should play out like this, that we end in the first wave of A, B, and a C, and then the market is going to recover. Now, as you guys know, we always preach and we told everyone always to try to trade with as much Elliott Wave hedging as you guys can, because Elliott Wave hedging is huge in this market. So technically speaking, Elliott Wave hedging is calling lower in the euro. What I mean with this is that in the euro you got I'm going to put it in order of most bearish, less bearish, and well, bullish there is none, in my opinion, right now. I mean, a little chance that some bullish in the euro. But, well, this is one that should be ending this cycle, and then this cycle should be ending very close around current levels, and then what you got is this. Forget about now the degree a little bit. It's something like this. You got A or W because it was a three-way. You got A here, or well, another W, little degree. Let me put it correctly. You got another A, you got S here, and then you have a W with a higher degree here. I mean, most of you guys should know this count already. You got this S right here, and then we're going lower in the Y way to end the D way. Now, because this was a three-way move, this needs to be a three-way move. So, technically speaking, we believe that the first W is ending pretty soon. We're going to see a recovering in the risk trade. Now the euro got a gap of about 50 pips to the upside already. We're going to see a recovery right here on the S way, and then the euro is going to trade lower to around 124, 125 area. After, the euro is going to make a recovery in three ways, and then the triangle B way on the dailies, on the weekly, is going to end something like this, and then the trough is going to happen. Now, why do we choose that scenario? Now, there is another scenario, as you guys know, that we've been presenting also, which is as follows. Is this one, and then the D way ended here, the E way ended here, and consequently the B way of A and B, and now the euro, in that scenario, the euro is going to trade lower if you move to like a monthly chart. Let me open it here. That being the case, and here you should get an equal legs of this magnitude starting from 145. Measures is going to take the euro to around 112, 114, 110 area. Now, if you look at it, the message is that 142.50 should be in hold, and 142.50, in my opinion, because of the trend line break right here, should hold as a risk to the downside now, no 149.40 anymore. That's going to make the case that Elliott Wave hedging is calling to the downside move in the euro. Now, why do we choose this one? Now, let's take the euro for a while and let's put the dollar index, because you guys know the dollar index is part of, is a big, the euro is a big component of the dollar index. This is the dollar index on the monthly, but I don't want it that big. Let me contract it a bit. Okay. If you guys remember, for the old members, I'm sure that Isa is going to remember, when we were around here, remember that we mentioned the idea that a possible leading diagonal can be in place. You guys remember, you remember Isa, right? You and me, we talk about it. Now, if you take a look at the euro structure, the euro is calling something like this. We are right here, right? It's calling higher, lower, and higher in 3 ways. So that's the patterns that most likely the euro is calling. All right? So now that patterns, if you apply that pattern to the euro, the dollar index, it looks like you have 1, 2, 3, 4, and then you're going to get a B wave, a 5, and then 3 waves back before the real move happens. I want you guys to take into consideration that, because I believe that something like that can be in place. Now, a good question is, why not a nest? I don't deny the nest. We were calling the nest, if you guys remember, around here when we're trying to take the position, the long dollar position in the CAD and in the Singapore dollar. But I have to admit it, the move from here, even though you can call it as a 1, 2, 1, 2, is going to see it better on the small time frame chart that right here, because this is a closing line. I would rather go with the idea that 1, 2, 3, 4, and a 5. And then the dollar is going to find some type of resistance after 3 weeks in, let me draw right here, so for the guys that they are not that savvy about Elliott Wave, you guys understand. You trade the trend lines here, and the dollar should find some type of resistance. This is the closing, so it's not exactly. So I'm expecting something like this to happen and create a leading diagonal wave A or wave 1 in the dollar index. The dollar used to do a lot of diagonals. It is possible. It also goes pretty well with a pair like the Norwegian krone, when you can see the diagonal even better than in the euro. That in the dollar index. Now, let's move on for a while now to the Norwegian krone. Let's put the 60-minute, the 8-hour chart, the Norwegian krone here. Let me contract it. And then, one second, the daily better. You guys can see how you got a swing. You got 3 backs to a new low here, another swing, 3 backs, and another swing. This also looks corrective. That's why I came out with the idea, and I've been playing with the idea. It's not the perfect diagonal. I don't understand. I agree that. And I would say this. For the bullish side, I would rather see this. I see 5 swing and then 3 back, and that's going to make the case for the euro to drop to 124, recovering and lower. The same can be said about cable. Now, why we prefer this type of scenario? Because in every pair, this move looks corrective. I mean, it's a powerful move. Don't get me wrong. Very powerful move. But corrective in some degrees. At least until now, that's what the RSI is calling a corrective move. Three-way move as of right now. Now, that's what we get about all this, I mean, in some degrees. Now, it is possible, if you look at the dollar like a dollar, I mean, do not need to go to the upside in an impulse way. And that's something that people tend to forget, because people or traders want are 5-way move, not necessary. If you take a look at the weekly, this can be a steer many things, my friends. Many things the dollar can be doing. Remember, from this low, you got a 3 ways and a 3 ways. But because the first leg is a 3, this also can be A, B, C, W, S, A, B, C. And then right here, you ending this leg. It's going to correct in 3. And then A, B, C, A, B, C, on to make a new high. Not necessarily everything needs to be 2008. If you take a look at the 2008 impulse on the dollar case, it was a 3-way move. Same with the euro. It wasn't a 5. And that's the tricky part. Because a regular ABC is very easy to catch, because you know that you're going to get an impulse right here. Now, when you got a 3, this is when it gets tricky. Why? Because you're expecting a 5, and the market does this type of recovering, which they are very, very corrective, and consequently tend to trick everyone, including me. I mean, I cannot go to you guys say that, that we have the Holy Grail, like I always say. But technically speaking, I believe that this law can be in place for a little while. It's still looking at a long time charge. You guys can take a look at it, and it's still the move when we can be within the triangle wave 4 in the case of the dollar. It's possible. I don't like it as a primary, but who knows that this is A, B, and we're going higher in the C wave. Only data and times we tell. All right? Now, let's move on to the US dollar in an 8-hour chart. And we start to downloading that, how we call it, that the time frames. Okay, in the 8-hour chart, look, it's a big gap today. It's almost 100. The euro is trading 132.90, and the high was 32.95. It's almost 70 pips out. Now, look, on the US dollar, 3, 4 round. From here, this can be 1, this can be 2 in a possible nest also. So what you have, but at this stage, you already have, if you take a look, almost 7 nests from the lows. That's why we prefer to put it like like A, B, Z, W, S, A, B, C, Y. Now, there is nothing wrong with that idea. Finally, it makes the RSI the move for the 3 weeks. And like I say, there is nothing wrong to go higher in a corrective wave, but it looks like you have 1, 2, 3, 4, 5, 6, 7 swing. 7 swing is corrective. Consequently, you have to look at a corrective impulse. Now, if it makes an 8 and a 9, guess what? It's going to be, a 9 is going to be impulsed, but at the same way, if it can be ABC, WS, ABZ, as a double zigzag also. So the way structure is not as an impulse as a likes. This is an impulse. You see the separation from here, how the market separates. Right here, there is no separation. There is a congestion. The biggest congestion of the whole move is on the middle right here. That's possible, correct. Now, do not mean that can go higher. So I'm going to give you an advice. Only concentrate now on the move that started here. Why? Because at this stage, you have two choices. This, which is the primary, in our view, which is going to be the euro going to 136, 137 area. That's a gift, in my opinion. Otherwise, you have, if you keep and start getting separation now, you have to start thinking about the next thing, where it goes 1, 2, 1, 2, and then from here, you can say 1, 2, 3, 4, and 5. Now, why we keep presenting this one instead of the more bullish of the two? Because I can count almost a 5-way swing completed in this leg, and we are not even at the equal legs. So I would rather go with this scenario when right here we have ABC, WS, ABC, Y, 3 backs, and then another high, another dollar strength to complete the 5 swing from the lows, and consequently make it an impulse move from the lows. Any question you got now, guys? You follow me what I mean? Now, let's keep downgrading it, the US dollar for a while. And let's move on now to the 1-hour chart. On the 1-hour chart, this is what we like. We like, I'm sorry, A, B, C, and then starting here you have 1, 2, 1, 2, 3, 4, 5, 3, 4, and a 5, with ideally 70, 79, 81, an extension 80, 30 to top, and then from there, the drop on the euro and the dollar is going to dictate where we are. I mean, nothing else that you can do, just to wait for the next drop on the dollar. If you take a look, downgrading the RSI, let's say to the 30-minute chart, you can make the case that from here you have 1, 2, 1, 2, the higher read on the RSI, this is 3, 4, and then you have the higher read of the RSI. I think it was right here, was 79.46, 78. So technically, it's a 3-way move from here to here. So technically, what should happen today is as follows. The dollar should drop to around 79, which in the euro is higher to 133.37, in like a flat. I believe it's doing a flat. And then from there, the dollar should bounce against to a new high, and that finish the divergence, finish the move, and then the dollar should be bounced to the downside. And that drops is the one that we're going to get a better rate, guys, where we are. Okay, that's for the dollar. Any question about the dollar so far? Okay, let's move on to oil now. Oil, we are presenting two scenarios. First scenario in oil, that this is A and we are on the B way. In that case, all you guys have is W, A, B, C, and then you have S and three more legs down, and now we're going higher. That's the bullish one. That's going to implicate a bounce, with a biggest bounce within the dollar. In other words, the dollar is this is the one that goes with the idea that the euro, for example, is going to get back to 137. Then oil should make a new high and complete a daily double zigzag from the lows as follows. You see, like W, S, A, B, and C to 106, 107, and then drop. That goes with the biggest recovery in oil, in the euro. Now, you have discount, which is also possible, and this is the most aggressive one, and this one goes with the idea that the dollar is going to make a small wave forward, and then the dollar is going to continue to get strong. This scenario goes as follows. 1, 2, 3, 4, 5 as a leading diagonal, a flat on the B way, and then lower. Those are the two scenarios. Again, nobody has the holy grail to say which one is the one that's going to play out. Now, let's move on pretty fast to, let's move on pretty fast to the individual pairs. The gap is getting bigger in the euro dollar, guys. I don't know if you guys tracking. Now it's a 130, it print a high of 133.05. One second here. There is any news in the market to make that gap? Anybody knows about it? Let me see if I got it right. And then we're going to start with the euro. I think the market, as of right now, I like the market after Thursday. I think it's one way, is in favor of the dollar, in my opinion. Now, that don't mean that you're going to get extremely bullish at this stage. Now, we're going to start with this. And we're going to do it on purpose, which is the euro dollar extremely bearish count. Look at the gap right there. This count's calling for the E weight ended here, and then that count is going to take the euro lower and fast. And the count goes as follows. You can make it both ways, 1, 2, 1, 2, 1, 2, and lower. Or seeing this gap right now, it's very hard to me to think about that scenario. That's why I say it's scenario number 2. That's what is a secondary. You can play a little bit with it and put it like, but just in case, as a service, I have to present it to you guys. You can do it like this. I would rather like it like this because of the RSI. And then right here you have A, put it like this. Yeah, a flat. You got A, B, and a C. Now, that scenario is super bearish. Possible? Yes. Most likable? No. The one that we like is this one. Seeing now the euro with the labor and everything. This is our preferred counts in Elliott Wave forecast. Is that right here it was S, this was W, and then we're going lower in a W or the less degree that should end, if it's not ended, should end around 131.60 area, or 130.46 is also possible. Now, after that, we're gonna get a bigger bounce on the dollar and the euro, which should be favorable completely against 142, and then going lower. Again, everything that I can say about it is a speculation. It's just my humble opinion and my expertise. But I would say this, a bounce, this is not time to sell the euro. I believe that everyone should wait a bit because this move that started here, it looks almost completed, and some type of bounce is going to take place. Now, that bounce is going to define whatever the degree of the count is. Why? Because, put it this way, let's move on and say that we are super bearish. You got, let's say that this is E, and then you got 1, 2, 1, 2, another 1, another 2. 3 nests. Possible. That's what I say. You have to see the bounce, and the bounce is going to dictate where we are. All right? Now, let's take a look to the 1-hour chart on the euro dollar. This is what we present yesterday. We say that from current levels or from 33, 37, the euro is going to drop, right? Why? Because, let's put it, it looks like this is the one, because if you take a look to the RSI, the lowest read in the move from here to here happened on Thursday. So, technically speaking, you have to sell against, I would say, 34. I don't like it about, I would say 34.11 is gone. In other words, 34.11, the low is in place, in my opinion. A temporary low is in place. Now, like I say, only a nest can make the case, but it's going to be then a triple nest to the downside. Again, the whole market is going to be selling the three-way move, I believe, at this stage, but that's scary in some degrees, because when the market is one side, you got to be careful, guys. All I can say, you guys, is that. But, I mean, this can be a still flat, All you have to do now, guys, and I want to be clear about it, even if we don't send the trade, do not mean that we don't tell you guys how it should be tradable. Me personally, I'm going to sell it, and I'm going to sell it fading the 5 ways move. I'm going to forget about the whole structure that's taking place, and I'm going to go from here. 1, 2, 1, 2, and I'm going to fade it when I see that these 5 ways that close to the end. Looks like wave 3 is taking place and or ending. There is nothing wrong to take a short right here. Why? Because you can make 300 picks in the trade right there, fading these 5 ways. All right? If it's a flat, then an area we are at the current at the equal legs, ideally is 33.27, 33.37 should be the area when everyone should be selling the euro and fading the euro tonight. Now, that doesn't mean that you're going to get the low, but it's a nice try. Why? Because you're fading this 5 that's starting here as a 1, possible 2, another 1, 2. I got to get into the inside. And then the worst can happen is this and that. That's the worst can happen, to be honest with you guys, right there. You have to cover your stop as soon as possible, and don't open the stop by any chance of imagination. Your stop should be right here, no more than the previous wave 4 that comes at 34.10. That's how I should play it. And I mean, I know that there is nothing wrong with it. Now, this move should make the case for another low if it came out to be a flat. And that way, the market should have ended a cycle that started here, on 11:22 at 6 a.m. in the morning, should have ended either here or with a new low. And after, you go and you reset and you let it run. An alternative is another nest, like I say, but there is no divergence from here to here. So I'm assuming that this is a wave 4 flat, in my opinion. Now, that's for the euro. I already explained to you guys the euro in the higher degree of a biggest time frame. This is my preferred count. I like the euro most likely to find support around 31.21. Why? Because it's the 618 of Dixie leg. It's going to be around that area. 3 backs and another 5 down. Another 3 down to around 124. Elliott Wave edging is calling lower euro against 42.50, in my opinion. Either the euro is going to drop in the triple nest or the euro is going to drop right here. Either this was the end of a triangle and we're breaking lower, or we are still in the D way. Or if we get back to the weekly on the euro, there is another count, which is ABCWS, and we're going down in the A way of the first leg, and then it's going to make 3 backs and lower. I want you guys to point out, do not need to be a 5-way move, because the first leg was a 1, 2, 3 equal legs. So if this count is correct, okay, 1 second. If this count is correct, then the euro should trade lower to around 124, 125 before any significant bounce if the count is correct. Now the question is, I know what you say, because in Elliott Wave, you know that this is the way I do it, Yakut. I'm sorry I mispronounced your name, something because of the language. Ideally, the stop should be here at 34.80. That's what you mean, right? Now, that's ideally, but I'm not willing to give that space a risk. Me personally, when I trade the wave 5, my stop goes about the 50% retracement of the wave 3. I don't believe in wave 4s that are bigger than 50% retracement. It's a single guys in this world, my friend. I don't label truncations unless I see the RSI supporting it. In that case, because for me, if it passed the previous wave 4 right here, which is 34.09, is done. Because the move has a lot of intrigue on it, a lot of overlapping, a lot of irregular move, and then you cannot be counting 100% that is an impulse from here. You know what I mean? You're following this count I label it as an irregular B, not the most beautiful in the world, but also can be the more beautiful in the world triangle. And then the triangle technically started here. And then you can make the case for 1, 2, 1, 2, 3, 4. I'm sorry, 1, 2, 1, 2, 3, 4, 5, 3, 4, and down. So what I'm trading is technically fading the 5 that's coming from here. Yeah, the triangle is possible. Don't get me wrong. If the triangle is in place, most likely this is done. So don't trade thinking, like I say, don't think, like I say when I explain that, don't think about the whole structure. Think about this move that started here, the small time frame move. Look, think about this, the moves that happened today on the pre-market. Think about this move. Exactly, and it is done. No, to be honest with you, I believe that the move for 142.50, it has a 99.9% to be a three-way than being a nest, in my opinion. Like I say, trade this, my friend. 1, 2, 3, 4, and 5. Fade this. Forget about the rest. Fade this. If a bonus comes and the euro collapses this to 9 and drop to 131, great. You got it. You follow me? That's trading savvy right there. If it's going to start creating a nest, what do you mean with that? If you start creating the nest, then what? Yeah, I like those two, yes. I like those two. 33.20, 33.76, yes. Very possible. 38.02 and 50% retracement. If the move start and you see, like, remember, it needs to get to around, in the most bullish of the cases, in my opinion, going back to the 4-hour, you gotta take it step by step. That's my whole point. This is, like I say, this is my preferred account in Elliott Wave. But what we're telling you today is that you got to take it step by step and not run before you work. Now, remember, it broke right here below the trend line. So the triangle do not look good. A third surprise can be, won't be the first, won't be the last. But all I can say is take it step by step. Why? Because if I'm incorrect in the cycles and I'm assuming he needs to go to 137.26. So he can do A, B, C, W, S, and start going in a corrective wave to the outside. So that's what I say. Fade the first 5, and then from there, if the move came out if the move came out in your favor, great. If no, guess what? You're gonna be able to cash some piece, because technically the market is gonna let you know. If you use some type of indicators, the market will let you know, and we will let you know, I mean, where we are. So think about a fade in the 5 and know about wave 4 or anything like that. That's my opinion. Now, let's keep moving and let's move to the Norwegian krone. Okay, the Norwegian krone, let me put it, this is the weekly. Okay, this is the 4-hour and the Norwegian krone. No, you're welcome. Again, same scenario as you guys see as the dollar. Same scenario. You see A, B, C, A should end A, B, and we're going with that scenario and no with the most bullish. But we know that the most bullish is possible. Don't get me wrong. Now, take a look at this chart. What you have, remember, coming out of the lows, most of the pairs, what they do is defy the old trend. That's why you get moved like this. Now look, 1, 2, 3, 4, and then going higher in the wave 5 is very possible. We're favoring that scenario now, but we know we have to see the decline on the dollar, how it's going to decline before we drop a biggest conclusion. That's the message that I want you guys to send. We want you guys to let you know, I mean, as far as I saw the euro to break below the scenario about the trend line, my mindset changed a bit. And I want you guys, don't want you guys to miss a move. So far, there is no separation. So the most bearish or bullish case in the dollar is going to take place. It's going to take place after the 3 ways back in the dollar. It's when the separation is going to happen. It's when wave 3 is going to happen, if that being the case. So for now, let's look at like this and move on. Now, let's take a look now to the Norwegian krone in 1 hour. Look, also, and that's why we keep saying that it's corrective. What do you have from here? You have 1, I mean, I can count it, 1, 2, 3, 4, 5, and then 6, 7, or incorporate this as a flat. Now, guess, look at the RSI. divergence. I know maybe ended here, or maybe it's a flat waveform. But again, if you want to trade the long side, all you have to do in the region is right here. Look, it looks like a diagonal. Doesn't look like a wave 3 that's taking place. You guys agree with me? It looks like a diagonal there. That's not a wave 3 taking place. So that's why we're going with the idea that it is either the biggest trap or all when it comes to the dollar bull, or it is the biggest trap or all on the dollar bull, or it is the leading diagonal. That's my message. I cannot change it. Now look at cable. Look at cable on the small time frame. You're going to see in cable how also it is possible. That's what I say. Chasing wave 5 sometimes is dangerous, and more dangerous when you got an oversold move like this. Look at cable. What you got? Look at the RSI. Same scenario. Even this gives you more and more reason to be a kind of static on the dollar. I keep saying the same since the beginning of the seminar. At this degree, I believe that you should be dollar bullish, but waiting. Yeah, dollar bullish, but waiting for the drop in the dollar to dictate your next step. Don't become a dollar bearish at this stage, 100%. Don't become a bullish, but wait. The market is going to dictate in the next 72 hours which degree we are. Now, cable, again. If you take a look at the 4-hour in cable, look. At this, about below the 76.4. Again, both scenarios can be possible, only that the drop in the euro below that degree, it makes me hard, unless it's a flat, to believe in something about 142.50, to be more than honest. I don't see it happening. S&P, the cash looks very bearish on the cash. Now, I believe in cable is going to do this, and again, it's going to drop. If you take a look in cable on the weekly chart, this is what we are proposing. The same path of the leading diagonal in the dollar, the same path to euro to 124, 126 in 3 and 3 backs. It's the same path everywhere. That's what we like. Now, let's move to Aussie, because Aussie is very interesting. Very interesting. Look, I'm going to change this count. I see 1, 2, 3, 4, 5, 6, 7 swing in Aussie. I believe that Aussie is going to trade 91. 91 should be 124 in the euro. How we going to do it? In a wave 4 as a double zigzag. It's going to trade here. It's going to trade here. You see, same pattern everywhere. And then Aussie is going to make a new high. You guys know how Aussie runs. And I believe, to make a kind of conclusion here, that after 3 weeks, the dollar should be a good buy. Now, we need to see the candles, how it's moving in the candles, to draw a conclusion that which one is the decrease. That's all I can tell you right now, guys. Look, that's what I like in Aussie. I like a higher very soon. If you take a look at the 4-hour, we tweak a little bit. DV has been showing me discount. A lot of credit for him here. He's been showing me discount for more than a week already, and I believe that he's completely correct. The subdivisions. But again, it looks like a 3-way move so far. It's not a 5, it's a 3. So a bounce should happen, and the bounce is going to dictate where we are in Aussie. So that goes like that for every single pair in the whole market. And I'm a pattern, guys, as you guys know, and I'm trying to make every pair to be in the same pattern when it comes to bigger cycles. No like a flat, the other one doing a zigzag. No, I'm talking about move in patterns, in cycles. And I believe that the move that started October the 22nd is coming to the end. And then we're going to see a 3-way recovery, which is going to dictate where we are. Now, let's move on to the S&P cash, and then I'm going to let you guys to ask questions. This is the cash in a 30-minute chart. Then what you got is what it looks to be, I mean, at this degree, it can be anything. I would go with the idea that it's bearish, but it can be anything. I like it bearish, don't get me wrong. But well, I'm a professional in this. Sometimes I look at this and I don't see it as a 5, I see it as a 3, 1, 2. But well, you can say that there is a 3, 4 here that doesn't show, I don't know. But well, let's leave it there. We need to see the bounce again. What is clear now is that from here to here, it looks like 3 ways they're coming to the end. Look at the RSI. Wave 3 was here. 3 ways coming to the end. Now, ideally, 1140 is going to provide support, and then the market is going to bounce. Again, the bounce is going to dictate the count. And then the bounce is going to dictate if they, I say to DV yesterday, only a miracle say that the S&P. I don't want to take position at this stage to either side. It can be discount with a B-wave flat, who say no, or it can be discount and then the crash is coming. Only times we tell. The message, trade based on Elliott Wave aging. Elliott Wave aging is calling that the dollar is going to get strong in some degrees unless a flat, and then if that flat is in place, they're going to be in Twitter, they're going to be people committing suicide. I'm sorry, but I know, because that's going to take almost everyone out of it. People are super bearish, but still can be in place. I don't say it's my preferred. My preferred, like I say, is this one in the euro, a bounce to around 136, 37, and a decline like crazy to the downside. The euro can be ended here, and now we are all the way to 112, 114. Possible. And the key is this, guys. The decline in 2008 in the euro, the rise in 2008 in the dollar was a three-wave move. You don't need 5 waves in any pair. So having said that, think about it. And that can be the case. Now, this is my preferred count. I'm going to set the euro tonight, me personally, around 133.27 area. And fade the 5 waves coming here. And see what happens. With the risk, no higher than 134.10. I'm not willing to provide a risk higher than that one. If I stop out, I'm going to sell it again at 136. And that's been the, but I'm going to buy it first. So that's what I think you guys should trade the whole thing. Now, question, guys. Any question that you guys want to ask about any pair? Being the euro gapping out or the dollar gapping down means that it's going to be another low in some degrees. You guys know I love gaps to fade the gaps because that's money that I'm giving to you. Sooner or later, the gap is going to get filled within the week. So, any question, guys, about any pair? In conclusion, what we say is this. The leading diagonal scenario is our preferred counts. Our preferred count is a correction in 3 ways, a higher degree correction in 3 ways to correct the whole move that started on October the 30th onto the new low, onto the lows that happened on Friday. And everyone should be buying that move higher and selling the move after. I believe at this stage that the euro is either going lower to 124 and bouncing higher to around 130 and change, and then going lower again, that the dollar is going lower to around 76 dB, right? And then rising again, and then lower, or the move ended right here, and we are nesting to the downside. You got to look at it like that, in my opinion. You got to look at it like that. So, because as of right now, and like we say, in the most of the bearish case, and I'm going to put as a sample the euro dollar is the one that most people trade. This is the most bearish of all. Triangle ended here. I'm going to count it like a 1-2-1-2 for 149. That's extremely bearish. I don't like the counts, the in size. I don't say it's not possible, but that's going to take the euro below 0. If that's the case, below 0, in my opinion. So I would rather go with this one. If the most of the bearish one, 1, 2, 1, 2, then the area of interest is around 133.87, 134.30. If that's the case of the next, if the next is the case, 135.71 should never more, it should never be breaking again. It is possible. I don't deny it. All I can say, you guys, is you have to take the chance and selling it, fading this 5 right here, and see what happens. Otherwise, you can live outside of the market. And our preferred, like I say, is not the next. Our preferred count is the one that is calling for the biggest bounce and lower. At this stage, we believe that 142.45 is the risk, no 149 anymore. We believe that this high is safe for a while, and then it's either a 3-way to 136, 137, or is a nest that is going to take it now to around 133, 134, and then the euro is going to start selling like a 300 pips average a day. And then, but before I let you guys, and please ask some questions, is that I want you guys to look this. This move, if this count is correct, A, B, C, D, E, this is the super bearish. This move is in 3, meaning that you don't need a nest here, meaning that you can drop like this. Yeah, I will cover it now. You can drop like this, something like that, and it's still in place because it's a double zigzag. I'm going to draw the triangle with the triangle in the middle. That's the structure that it looks like the euro is taking place. I don't buy the idea that 1, 2, 1, 2. No, I don't like that. I like this because this is a nest. This is a 3-way move. Look, 3-way move. And that's very important. I don't know if you guys have thought about it. What a nice gap to be faded. Hey, Divy. It's a beauty to be faded tonight. Look. 2 equal legs right there. That's a 3-way. So you don't, in the case that is bearish, you don't need 3 ways from here. Only you need right here is 3 ways. So only a flat, which is going to be, doesn't look like, and then it's had to make 5 ways here. Only a 5 S-way, and then that, because this count is also possible. But guys, you got to take the chances and be a little bit aggressive, in my opinion. I don't know what they're going to say in Europe to make the case for the flat, even though I don't believe in the news. But it looks like they have to find the holy grail in Europe. A lot of people are going to lose money today. Now, this count also can be possible. Let me put it to you guys. So you guys see all alternative. This is A, this is B, or W. Let me put it correctly so you guys do not get confused. And then this is Y. Then you got A. And then you got 3 backs. And that's big here. Right? And then now you ending W here. And then in that way you don't need a triangle. And that way what you need now is 3 ways back in whatever structure it is, and that's going to make the things even more compressed. But I have to say, you guys, that is possible. And then he's going to make this, and then lower. Right? That has 1 in a million chance to happen, but I have to let you guys know. Now, dollar CAD. 1 second. On the dailies, I mean, I would say this. That's what we roll right here. The cat is either nesting or to explode or trapping the bulls. Let me show you something. The dollar cat, what has done from here is a 3-way move. Now, extension-wise, you're going to mention like this, Ed. Let's see. If I see that goes to 106.15, and then drop before overlapping, then you say, well, it's nesting because you're going to get 5 waves. Or if it goes right here and it goes here, like we are expecting, you got to say higher. Dollar cap is kind of in his own world because the angle is calling for a nest or is calling for a double zigzag out of the lows. Now, it can be a double zigzag or can be a nest. This looks, out of the whole pairs, believe it or not, guys, the dollar cat is the most eyes wide bullish on the dollar, in my opinion. It was the first one to broke below. Remember that the trend line that was here, it was the first one. And I would say at this stage, it looks like it's the most bullish at all. Now, again, a cycle is ending from here. And I want to put that in perspective. Look. This is the proposed second nest in the dollar cap right here. You see, from the lows, you have, if it's a nest, 1, 2, even though I don't see these are the 5, 1, 2, and then you have another 1, another 2. And then from here, from here you can make the case 1 in regular 2, and then you can make the case 3, 4, 5. Look at the RSI. It's either one more high or lower. And then when you get back to the daily, you have 1, 2, and another 5. So it looks, I mean, like I say, the more that I can give to the bulls on the dollar is a leading diagonal. I want to see the market tonight, how it reacts. I want to see after the 5 ways, I mean, how it reacts and take conclusion from there. We knew all over, and getting back, and DV heard me with this, am I incorrect? We were calling since Sunday that the lows around 34.18 is going to be broken before, before 142. We were right there. We were saying that that the euro should drop, and I remember that I remember the chart on Wednesday night. No, on Tuesday night, when we draw the triangle and we draw the line on the chart, dropping from the triangle or dropping for 136. Exactly. The market did what we say it's going to do. Now, same Thursday, we were calling for the bounce. Guess what? The bounce can be around the corner or can be happening. The move can be completed. So we've been calling the move correctly. When the move was at 142, we say it's going to go to 134. It's in a stand. We were calling as a big way. It wasn't a big way. Looks like it wasn't a big way. We've been calling correctly. All that happened is that the market is very hard to be traded, to be honest with you guys. The market is very hard to be tradable. The move being, the core being correct, they're being the right core. If you follow the trend line, now, I know that the timing when it comes to calling the bounce, listen, nobody's going to have it right. That's why nobody, the only service that called the bounce, you can call it, is our service. Don't worry, Rafi, you are the man. So technically, because I guarantee you, if you go to similar service like Elliott Wave International, they are calling and a straight line in the euro to 112. Because I know them. They're calling a straight line to 112. We are not like that. That's why sometimes I know it's painful that saying Thursday we've been calling a possible bounce. It didn't happen until today. But I'm sorry, guys. I mean, what else we can do? DB works 24 hours a day. I work 24 hours a day. I mean, like I say, we try the best, and sorry sometimes I say that is because, I mean, there is DB telling me things on the because I take it to the heart, guys. That's all I can tell you. I had honest and sincere, guys, and I don't like to be wrong, but I take a lot of pride on what we do. I mean, I take a lot of pride on what we do, and I have to take it sometimes. But I believe technically that, I mean, good opportunity coming to the market, and which we will try to be as precise as possible on the terms. But, well, unfortunately, not every time we're right. So, like I say, in the dollar cap, it's like everything, guys. The cap is getting bigger and bigger. I mean, now it's at 133.31 on the euro. So, guys, like I say, 34.10 is the line in the sand. About 34.10, you have to start thinking either that this is, let me explain the euro for you guys a little bit again. And I'm sorry, guys, sometimes I can go a little bit out of that. That's just me. This is the euro. Look at the gap, 33.29, 33.30 now. I mean, it can be the flat 4, or it can be something bigger. Now, you got to take it to steps. First, the wave 4. And the wave 4, you go from here. It's at the 38.02 now. That's on the wave 4. If no wave 4, second step, the next. And then it's got to go to 33.92, 34 area. Around this resistance area. If we pass that area, and then the cycle is this one, and then it's going to go to 37, which is my preferred count. My preferred count is that either one more low or over the move that started on October the 27th. And it looks like the market is following a 30-day cycles. Because if you take into consideration that, I don't know if you guys noticed that times-wise, from here, this is 240 cycles. There were 111. And from here, there are 132 cycles. So it's about the same amount, very similar type of cycle. So like I say, you got to take it by steps. We were expecting a bounce, the bounce taking place. It still can be a flat wave 4. I don't deny that. The gap is telling me that is at this stage, the gap is very low. So the gap is telling me that it is. No, I go with gold for you now. Yeah, the recorded version is going to be available later on today, Bruce. Now, the gap that we have right here is telling me that it's either the 4 or the next to the downside. Because most of the gas, they are filled on the same week. So technically, and most likely they're going to get filled by tomorrow. So it's either the 4 from here like we say, is very big, but the fever comes from here. So it's at the fever level now that should, and it's entering the previous wave 4 as a flat. So technically, is this or the next? I don't see it with a gap. I don't know, DV, you agree with me? I don't see it with a gap at 132.35 right here that this market is going to get in this area. And then if it get that low, it's going to make a new low. So I would treat it right now as a flat. I would treat it as a flat. And I wish that the market opened very soon. It's an hour and a half yet. Let me see the RSI. There's still no divergence. It looks like there is two nests. The first one, let me see the 1 minute. 1 second. You have 1, 2, 3. Well, it looks like a two nest right here. Or maybe you have one, yeah, two nests. And then right here is reading 83, 81. So right now it's reading 76. Maybe we are ending wave 3. Well, it's in the area. That's all I can say. Now, you have to treat it like I say, step by step. Don't roll before you walk. For your knowledge, Rafi, cable is trading at 154.83. It looks like it's a Euro news or something. I don't know. Now, go. The count, Bruce, we've been hitting. Yeah, the market is trading. I got markets in St. New York. That's the news. There you go. I think that we said on Friday, guys, right? That we say that some type of news is going to hit the market soon because of the way structure is calling for the bounce. I mean, going to Gore, Bruce, we're hitting the count in Gore to the pit. So far, so good. We believe that Gore hasn't topped, that Gore has more outside, and we believe that Gore, he did a three-ways decline here, a corrective move, I believe it was to the 618, and then most likely the structure is not decided. I mean, the structure is not decided yet in the 4-hour higher in Gore, Bruce. This can, all you know right now is that you have a 3. You have a 3 against a 3. So technically, if it's a 3 against the 3, you should expect some corrective move to the downside or sideways correction. The dip of this correction do not look like it's a triangle. So maybe you have two alternatives. Maybe you're going to do this. Now, it looks like a 1, 2, and 3 onto here, or an ABC. You need to wait and see what's happening. But we always going to favor the zigzag and the double zigzag. Now, that's why you see this structure here. But this structure can take many things. He can go from here now and go here, and then from there, it can drop in 5 and do a flat, or from there can do this, and then start like a sideways triangle. It's too early to tell which structure it's going to take, to be honest with you. Now, on the 60-minute chart, That's what I think. That's what I think, Rafi, also, yeah. Rafi saying that one more low in Europe will make the whole cycle 42.54 ends. Probably the same with cable. Now, right here, this is gore in the 1 hour. You got 1, 2, 3, 4, 5, 2. We got a great core right here. We call this move completely here. And then you have the subdivision 1, 2, 1, 2. Then 3, 4, 5. In the decline, you don't have divergency. And then maybe you're getting either a flat or a triangle in a small degree. A triangle in a small degree right here. But you gotta be playing based on the risk. Now the risk in gore is at 1734. It's kind of high, but I mean, FIBO wise looks good, but gore is very tricky sometimes. All right, look, 1, 2 to the 3.236. If the count is correct, it went to the 3802 right there. This looks corrective or an irregular 1, 2, and then gold is gonna drop. I mean, what is the most outsized for the triangle? If the triangle is gonna take place, you mean? I would say this. If the triangle is gonna take place, most likely he should come to around 1830, if that being the case. But then this looks important compared to this. So it needs, at least in my opinion, one more low. I don't know. I mean, all you have right now is 3 ways here. And then if you take the FIBO, it should be around the 50. You see? At the 50. That's what it bounds here. Now, if you're going to get to the upside, should go to the 618 here, which is also the 76.4 right here. I mean, right here should be a good, yeah, I will do it now. I got the swings and your question, I mean, should be around, if this B wave is gonna take place as a triangle, then it should go here, and then that should be your B wave in the triangle. And then that's gonna take more sideways consolidation like this. You know what I mean? And then you did it in WSY. Now, the dollar swigs. What time frame, Rafi? Daily? Okay, on the daily, the swigs is a beauty. I don't say that too often. The swigs did a new high here. Yeah, I covered S&P already. I mean, it looks like even is violating one of my rules as a waiver, because technically in my rules, look, right here, if I were laboring, I don't know if you guys agree with me, I would go like this. From here to here, nah, that's a 5-way move. Perfect. Here. I will labor it like this, Rafi, look. You say from here? From here. Because I always told you, my friend, to get to 9, you need to pass by 7. I will label it like this. 1, 2, as an irregular flat. 3, that went to the 618. When you have 1, 2, 1, 2, don't get me about it. 1, 2, and then 3, 4, 5. Look at the divergency that this pair is giving you. Now, and then you got the 4 that went to the 3802. If I'm going to be a seller in this pair at this stage, I will wait to start selling it around 95. You're saying that this is 7 ways. We start selling in there. That is in the daily. Nah, I don't know, Rafi. It's too perfect for this to be a flat, in my opinion. It's too perfect for this to be a flat. It's too perfect to be a flat, in my opinion. It's too perfect to be a flat. I would go more with a 5-way move and being this completed. I mean, that it can be a flat, I don't know. But I like it as a 5th way because of the RSI. Let me see the 4-hour chart right there. This is the low, right? This is the 85 that you say. 1 second. We got right here 66, 74, 71. You probably ended I know what you mean about 7 ways. I don't deny it's tricky. The sweetie sometimes is amazing. I don't know. I believe that maybe a diagonal. Look at that. Look at that price action right there. It looks like 3 here, 3 backs, 3 here. Unbelievable. That's what I don't like that pair. Yeah, there is divergency everywhere. Don't get me wrong. It's a sell. Don't get me wrong. It's a sell. But it's 5 swings from here. Don't you agree? It's a sell, but I see 5 swings. Now, 93.15, 93.30 doesn't say too much. It's a sell. Don't get me wrong. It's a sell. It's a sell. You got divergency on the 3, and on the 5 you still do not have divergency. So technically, I believe that has more outside. It got a little bit more outside, or it's a flat. Don't get me wrong. Yeah, I cover cable. Any other question, guys? Cable is the same, Rafi, the same with the S&P. Look, the S&P cash looks impulsive to the downside from here and impulse. The rest, I got my questions. So I want to see this bounce. If this bounce, you got to trade your FIBO, 1189, previous 4. I would like to see it down to 1140. which is the 1.618 of the first swing. I know that this needs to be into consideration. Even I believe it's a 3, that we can be ending there. I mean, I would think this is what we present yesterday, Rafi. Check it on the side, on the euro. One second. What happened to his in now? There you go. Sometimes they're late in. Okay, this is what we present last night. We were calling either here or we were calling the flat. Right now, what you have, but I know that at the end of the day, I don't want to get too much repetition, is either a wave for a nest or the 3 ways coming to the outside. It's either one of the 3. But I believe that 142.50 is safe at this stage, in my opinion. I mean, in my opinion, it's going to do this and this. Or it's going to do this, here, and this. One or the other. But at the end, it's going to be the same result. Or can be done here and do this. So, better answer for you. That's my opinion. All depends on how you look this. If it's a triangle and it ended here and then it's done and then it's going to go to minimum 136, 137. No, depends. If one way or the other, yes. But if a still is not a triangle, and then it's this count, he's on the 38.2 area, and you got a gap, you got a very huge gap right here, or over 100 picks, that needs to be filled. You always fill the gap. Don't worry about it. You don't fill the gap. Don't you agree, David, with that? So the gap is at the low. That's telling you that one way or the other, the low is gone. Now, if it does this from here, if it does this, and then you have to look like this, or a higher degree like this, but that's going to happen. This result right here will happen one way or the other. My preferred one is this one. But don't deny the other one either. You can't deny the other one either. The nest. Cable is calling for this one. That's what I'm saying. Norwegian is calling for that one. Now, you have to wait and see which one. I mean, nobody has the Holy Grail to say it's this one. You know what I mean? This is what I like in cable, Rafi. People tend to forget the gap that is happening today, instead of being dollar bearish, is dollar bullish. I don't know if you guys agree with me. That's a bullish dollar gap. That's what I like in cable, Rafi. You can, yes. But I don't know. Maybe not this round. Maybe in the next one of selling. I believe that you were right when I was saying that this was a B way, and you were saying that this was part of the D way. I believe in that way you were right. I have to get credit for it. Any question, guys? Yeah, most likely. I agree with you 100%. You see how I'll give you credit? You are the man. You know what you're doing. Any other question? It's not easy, Rafi. You've been with us for more than a year. It's not easy, as you know. But at the end of the day, we try the best. You know that. Okay, guys, if it's no more question, let's leave it there. I'm going to process the recording. When I'm sleeping? No, it's because DV is covering. That's why you see London also. I mean, don't worry. We're going to try to process the recording as soon as possible. I mean, Bruce, I'm expert in a bounce in the S&P. I'm expert in a bounce and risk. That's all I can tell. The bounce is going to take the S&P within these two counts, my friend. Look. Yeah, Christmas rally, like people. Okay, this is the alternative that people need to look at the S&P. Is either discount ABCWS ABC is that one, or it is this one. Now, many things can happen, and he can start nesting. Remember, S&P needs to drop as an impulse. I want you guys to look at that. S&P different that the S&P, yeah, that can be the case, Rafi, they're flat. But that's one out of 100 in my case now. The S&P dropped in 2008 indifferent with the dollar, S&P dropped in 5. So maybe S&P did 1, 2, and then 1, 2, and then it's going to make another 1, 2 here before it gets separation. Yeah. But I don't know. I don't want to sound. I told DV yesterday, only America saved the S&P. It looks bearish. This is the 30-minute chart. I was favoring a bounce. You see? Like this. Ideally, yeah, exactly. We mentioned that early, that there is already a bullish divergence making place right here. Now, ideally, it goes 1, 2, 3, 4, 5. So technically, all you have in the S&P is a three-way move. Do you agree with me? That's a three-way move. All you have. So you cannot be either side now. Exactly. You cannot say nothing now. This is your risk. 1240, 1214. 1214 is going to create overlap. And then you have to see the bounds. Now, if he makes a 4 and a 5, what's coming is Armageddon. But you have to wait. And then 4 and 5 is going to come straight back. Or he can do this. 1, 2, another nest. 1, 2, and then it's going to respect towards 67. But both scenarios that, I mean, all you got from the top is a three-way. But a bounce, I have no question in my mind that at least a 40 or 50 point bounce is going to happen in S&P sooner or later, in my opinion. I like it for 1140. Yeah, and I see Euro 136, 137, and it's the same, guys. Look, it's the same patterns. It's the same patterns everywhere. That's why I prefer that pattern, or the same path, better say. Look, this is the S&P. No, it says cable. What is S&P? On the 4 hour. You got to take a shot because of the gap. If I say this move that's taking place, it take place tomorrow, I would say, be careful. But because of the gap, I don't see any issue with it. Look, this is the 8 hour or the 8 hour on the S&P. Now, what I was trying to say is that the S&P can drop, need to drop strong. So don't get surprised of this. That makes the 3. Now, 3, 4, and 5. Now, my question to you is, what is the pattern that we're calling in every pair? Risk higher, risk lower. Don't you agree, guys? Euro to 136 to 125. Cable to 139 below 152. Same pattern. Dollar 76 higher. S&P higher risk, lower. And then after all this, we are expecting a 3-way recovery. S&P is going to do another nest and then the crash. That's the way I look at it. David, you agree with that now? I mean, that's very important. It looks like that's the pattern that most of the pairs are following. Aussie, a B-way and lower to 92. Or lower. Yeah, cable is like this. Wave. Within the D way, Rafi. You see? Now, I was saying this. W, S, A, B, and Z. And then C. No, I don't think it's going to. I mean, cable, believe it or not, is being the stronger currency against the dollar. It's being cable. It's possible. It's possible. Going about this one, it's possible. But the thing is that I'm going to tell you why I don't like it. Because why I don't like it, because if this was a B way, you got to trade a trend line here, Rafi, between those two lows. Well, cable is within the range. Cable is still possible. You know what I mean? Cable is still possible. It's testing the trend line as we speak. But I like higher risk. In a 3 ways, I like higher risk this week. The degree is very hard to tell. That's all I can tell you. S&P can be nesting. This can get, but I like lower dollar, higher risk this week in some degrees. You got to take it step by step. That's what I can say. Yeah, cable is possible, Rafi, still. But it's only, that's if you look only at cable. Most likely is this a scenario to test the previous trend line here. Then here, like we were telling before, you was telling, cable to 151.87 after 3 ways back. That is my most likely scenario. No, I don't have other one, to be honest with you. Okay, guys, so let's leave it there. I put the recorder as soon as possible. Love you guys all. I talk to you guys on the Skype. Thank you.